Dear fellow veterans, want to talk to you about the IRRRL. That's the IRRRL, interest rate reduction refinancing loan. Yes, the military and their acronyms, it continues on when we talk about mortgages. The reason I want to talk to you about it now is because as rates fall again, you're going to get tons of advertisements, tons of letters in the mail, and all kinds of phone calls and everything. If you haven't been getting them already, I get them all the time, even though my interest rate is 2.25% from 2021. So I always like to say that this is the most common sense refinance that exists. When you do a conventional loan or other type of refinances to lower your interest rate, they want to look at your credit, they want to look at your income, they want to look at your employment, they want to get a new appraisal. The IRRRL is the most common sense. Why? Because if you could afford your payment now at whatever that amount is, then you could afford it when it's a few $100s less, can't you? Right. So they don't look at your employment, they don't look at your income, they don't need an appraisal. You can roll the cost, add the cost to your loan, literally be upside down, owe more than your value, but it doesn't matter. They just want you to lower your interest rate. You've got to lower it by at least 0.5%. But lowering it 0.5% alone is not enough. There needs to be enough benefit. You need to recoup your costs within 3 years, 36 payments, 36 months. What does that mean? If you drop your payment by $200 a month, multiply that by 36, and you're going to get $7,200. Your true closing costs cannot be more than $7,200. What do I mean by true closing costs? A true closing cost is doc stamps, intangible tax, title, insurance, recording fees, all these things that are actual costs. Your prepaid interest, your escrows for taxes and insurance, those are not costs. Yeah, they fall under closing costs in a closing, but you pay them no matter what. Whether you do this refinance or you don't do this refinance, you're going to pay your taxes and insurance, you're going to pay your interest. So those do not factor into what your actual costs are on the loan. So those are just some of the basics. Now, again, the easiest part is all we need from you is your recent mortgage statement, your homeowner's insurance information. We look up your property and your taxes in public record. So we don't really need too much. We'll need your IDs. We do run credit, but it's a mortgage only credit. So we're only looking at your mortgage history. We're not looking at credit cards and student loans and car payments and all those other things. So again, it's the most common sense refinance that there is, the IRRRL. If you have any questions about it, I'd be happy to answer them. Just leave them in the comments below. If you want some free information on the IRRRL, please comment free info and I'll be happy to send it to you. Mortgage Nerd out.